Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, looking for investment opportunities and sharing those opportunities with everyone in the community. I do that through midweek updates and Q&A sessions on the weekends. We do have a special going on. Special is the coupon code. You type that in, you get 50% off the first month only on a monthly membership, and a $100 discount on the yearly membership if you'd like to sign up for a year, or you can switch from a monthly to a yearly and get those savings if you'd like. So starting off, the ape of Gold Street. It's not the bull market. You really are a genius. Well, I will say this: it's not about being a genius. It's about identifying when the bull market starts and when the bull market ends. And that is what makes you a genius, in my opinion. That's what makes you a good investor. Getting in early, getting in when things are inflecting from negative to positive for companies and equities, that is the whole name of the game. Now, does it make you a genius of buying it early and selling it when you're supposed to, roughly speaking? In my opinion, yes. It does make you special. I don't know about a genius, but it does make you special. Why? Because most people can't do it. And if you can do something that most people cannot do, you will get paid a very, very good return if you can do that. That's what I have based my entire investing. I'll say the website is all around this. How to identify early entry points and how to identify exit points in the general area of where we're supposed to be. I use ratios, technical analysis, and I also use market cycles, which are all interconnected. The ratios will tell you where you're at in the cycle, and so will technical analysis. You cannot gain that from news. You cannot gain that from experts' opinions. You're going to have to do it yourself. Why? Because everyone is influenced by everyone else. And great entry points means that you're going to be buying when everyone else is telling you that it's not a great entry point. So yeah, you do have to be special. I don't know about genius. And yes, investing only during bull markets for that commodity or sector or financial assets, whatever it is, yes, that makes you special. It does. So it's not the bull market. You really are a genius. Well, if you can invest during the whole bull market, then you are pretty good. So here are some of those kind of beginning points here. This is how you buy early. We're looking at some ratios here. GDX versus the NASDAQ, and OIH, which is energy service companies, versus the NASDAQ. And GDX is the gold mining companies. So GDX versus IXIC. What this is a falling wedge with a huge move lower. We peaked out in the late 2000s, early 2010s. We had a major outperformance of the NASDAQ. Up here, we should have been buying a whole bunch of NASDAQ. And the charts were bottoming at that time and consolidating. Charts like NVIDIA, Apple, stuff like that. We had a huge outperformance of the NASDAQ, and now we're bottoming. We've been bottoming since, I'd say, 2019, 2016. So we've been bottoming out and squeezing up. If we zoom in on the right-hand side, we have a falling wedge that just recently broke out. So GDX is just starting to outperform the NASDAQ. What does that mean? It means the market conditions are just They've just changed. They've just changed. And we've been buying this corner here in gold mining and silver mining companies, ones that have bottoming patterns. That's how you buy bottoms. That is how you become a smart investor. And then another attribute that is highly needed is patience. Because if you buy down here, you're basically buying the best possible spot that you can, I'll say, buy almost for a lot of these gold and silver mining companies. And then it puts the ball in your court where you have to hold on. Holding on is tough. Not a lot of people can do it. They want to sell as it goes up. Hey, look, I got a 100% gain. Is it time to sell? Hey, look, I have a 300% gain. Should I sell it? Guys, if this goes back up, I don't think you understand what this reversed upward for GDX will do for you. I don't think you have any inclination or clue of what that means. That means thousands of percents gains against the NASDAQ. Thousands. Because the NASDAQ will most likely go down or sideways. And some of these companies in GDX are going to go up many, many, many fold. And you wouldn't be asking, hey, I'm up 300, 400, 500, 600%. And a company is like, hey, guys, this is just the beginning. And I don't know how to like transfer that. It's not confidence. It's not conviction. It's the ability to see the future without seeing the future through the value of like ratios or the value of sectors. And then knowing what has happened historically through these cycles. And even if you know that, it still may be difficult for some personality types to hold on. It really is. Here's OIH versus IXIC. This is the NASDAQ. So what I'm doing is I'm taking two different sectors. GDX is gold and silver mining companies. OIH is energy service companies in the oil and gas space, for the most part. We have a falling wedge into a double bottom. There's the double bottom against the NASDAQ. And this is like the lowest you can probably get is somewhere in this general area of where we're at today. Now, people will buy that or they'll look at it and they'll say, well, this company's down. Yeah, that's how you buy bottoms. You can't buy bottoms when the company is up. Does that make sense? You buy bottoms, by definition, they are bottoming against the other asset class. That is what a bottom is. And then we've got a double bottom here. So more than likely, it will bottom around this general area. Does it mean that we're at the absolute bottom? I don't know. But the question shouldn't be, Andy, is this the absolute bottom? I'll say, I don't know, but are we close enough to buy? That's the right question. And my answer is yes. We're close enough to buy, to average in this general area. Now, if we get a recession or a slowdown and it goes down a little bit, it may go up, but let's say it goes down a little bit. We buy more. So you don't know what the future is. I don't know, and I'm not making predictions that these companies will go up, and I know the time frame in it. But what I do know is that it's cheap and that it has a bottoming pattern. That is what I do know. That's in the given because it's right in front of us. And that's all you get. You don't get a prediction. You don't get the absolute bottom with certainty. Generally, bottoms are made bottoms are created and made with uncertainty. That is where the bottom exists. It exists within uncertainty. And uncertainty is giving you that opportunity. And that's where you have to play. You have to play in the world where no one else wants to play, in the game of uncertainty. Here's XOP. Yeah, you know me, I had to do that. Energy versus the NASDAQ. It's another one. right? So the top, clear as day, is 2008. Look at that top. Now, here's the thing. What if you could get somewhere up here and you could ride it all the way down to 2020, right to that bottom? It looks like a falling wedge almost. Very, very close to a falling wedge if you come up this way. There, and then the bottom's there. Then we've got some sort of bottoming pattern that we're going through right now, and then we've got a falling wedge. So it's kind of like a little pattern here, whatever it is. We break out, and then we've got a falling wedge going on. Is this the absolute bottom? I don't know. Is it close enough to buy? Yeah, definitely. And this will break out to the upside. Why am I so confident? We're gonna go into an inflationary environment, increasing interest rates, and money is going to move a little bit different than before. That's what makes me confident. I'm confident in the market conditions and my ability to read the market conditions. Another thing is that this ratio is dirt cheap compared to what it was historically. It's way down here versus way up here. Up here, it is dangerous. Down here, it is not as dangerous because it's sold off so much against the NASDAQ. The NASDAQ is now dangerous. NASDAQ is cheap up here. It is expensive down here. So I would want to own the NASDAQ up here, and I'd want to own energy down here. It's so easy when looking backwards. It's so difficult when you're going through it for most people. They don't have the conviction. They don't have that the knowledge maybe or the emotional intestinal fortitude to ride through some of the volatility here at the bottom, knowing that you're buying something that's undervalued. Flint Simmons, energy stocks bottomed with the cyclical bottom in oil during April, May of 2025. An asymmetric opportunity defined. With North American marginal barrel break-evens at current spot, drill baby drill is reduced to a slogan. The risk is supply related much more than demand related. KSA, the Saudi Arabia, gaining control quickly. The era of cheap energy is ending. Up here, opportunity. The era of cheap energy is ending. Totally agree. Here's a little bit different topic. How millionaires make money. Well, I don't know about millionaires, but how do people who are successful make money? This is what I would say. If you want to try to make money the fastest, you're going to have to open up your own company. Then what I would do is I would reinvest the money back into the company. It reduces your taxes and it will grow the company faster. And you have full control over what you are doing and where that money goes and where it's invested. So that is where you build assets for the business that generates cash flow. So that's how you make a lot of money fast. If you go into the stock market and you want to invest money, you have to be patient. You don't have full control over it. You have control over where you buy and where you deploy money. But you don't have control over the outcome. You have to sit, you have to wait, and you have to be patient. So it's a little bit different. So the best way that I would do it, or the fastest way, is that I would open a company that people obviously want. You reinvest it to grow it. And any excess capital that you have left over that you can't pile back into the company, I would invest in acquiring assets across the board, whether it be real estate or businesses in the stock market, and kind of use that to just sit and be patient with and let it grow with time. That's how I would do it. And hopefully it's in accounts that are not taxable accounts like retirement accounts. Wisdom says rich people buy time, poor people buy stuff, ambitious people buy skills, lazy people buy distractions, says Alex Hormozy. I never really thought about this, and I don't know what category I necessarily fit into, but I don't really buy stuff. So I'm not poor people because I really don't buy anything. I do buy time, but I don't know if I consider myself rich people. I don't really put a title to myself. I just do it because that's what I want to do. Do I buy skills? I don't buy skills. I just create them. I don't really buy them. I don't train myself. I don't buy something. It's not like I go to Target and go buy some skills. I just develop them myself. So yeah, I don't buy skills. I just develop them myself. So I don't know if I need to develop skills. Rock bottom entries. So many have been waiting years upon years for a mania in precious metals. And then they sell all of their exposure the moment the relative strength indicator gets overbought. Bull or bear market, only 0.01% end up making big returns. You've got to know when to hold them and know when to fold them. Yeah, that's what I was talking about up above. That are you a genius or are you just in a bull market? Well, you are. Because a lot of people, they go into bull markets and they don't, they can't even identify that they're in a bull market, number one. Number two, they don't make much money from it. So the only use that the bull market has is if you can take advantage of it. That's it. And if you can't take advantage of it, you're not that good. If you can take a big part or a big chunk out of that bull market and log it, yeah, you're pretty good. You're pretty good. That is the definition between someone who's good and someone who's not that good. Smart real estate bets, a periodic reminder of where single family resale inventory is after the highly publicized surge in recent years. This data goes back to 1983, and look where it remains today. Two, look where inventory was in 2019. Remember 2020? Brace yourself for what 5% rates could bring. So we're not really at a high level here for single family home resale inventory. It's pretty low. And in fact, it's so low that we are lower than any time in history going back to 1983 where we are today. So is that a bulging inventory? No, it's lower than any time in history going back to 1983. Another one from Grady, the silver to gold ratio, SGR is here, which is the reverse, GSR, has a cleaner pattern than the GSR, gold to silver ratio. This chart now looks ready to deliver a historical up move and a lifetime opportunity. It's an awesome chart. Big bullish reversal at support last quarter. I think the time has come. So this is an expanding falling wedge, usually very bullish, and we are about to break out of that pattern on the ratio. What does this mean? It means silver is about to launch. It's about to launch. Andy, it's already launching. Well, here we go. It's going to go here. And it's going to be big. And all you had to do was buy some and sit. That's it. You don't have to try to trade your way around this. You don't have to do any of that BS, guys. You get in, you get exposure, and then you just sit. This is going to be one of the biggest bull markets probably we've ever seen in silver. Gold will probably be in one too. But people are very impatient. I get it. You're going to have to fix that if you want to be a good investor. Here's David Bateman. He went pretty big in gold and silver. Let's see what he has to say. He says gold and silver will increase in value far faster than the dollar declines in value due to simple supply and demand versus demand economics. Soon, the central banks, commercial banks, select corporations, and elites won't be able to hide their precious metals strategy, and the masses will catch on that fiat is collapsing, and crypto is a liquidity trap to draw funds away from precious metals and to prop up the unsustainable U.S. debt. Holders of global fiat will soon be scrambling to acquire the little remaining precious metal. Most all asset classes will decline in value compared to precious metals as the obscene global debt bubble finally pops and treasury yields in Western countries blow out to the upside. Tariffs are an accelerant to this whole process. US is a house of cards. Asia, and specifically China, is positioned to dominate globally. We're fools for buying crypto when we could be amassing precious metals. Our own government is leading us off a cliff as China positions its citizens with strength. The Western governments know what they're doing, not financial advice. Here's Jordan. This is the last one here. He says, let me remind you of something very important. There are two reasons this bull market in precious metals will entail vertical moves like the 1970s. First, there will be a preponderance of new all-time highs in gold and soon enough silver. New all-time highs breeds more buyers and more speculation. There's no supply to chew through like in the 2000s. And second, once the secular bull in stocks end, as it did at the end of the 1960s, both stocks and bonds will be in a secular bear market. Capital will flow increasingly towards gold, silver, and other hard assets. Act accordingly. Totally agree with both of those. Totally agree. And I like the second one the best. More money is going to funnel into less things. That's going to be the bull market. So that's all I've got for today, guys. That's where we're going to end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special with the coupon code. And that's all I've got for today. So we'll catch you next time. This is Finding Value.